Welcome to the question clip on chapter 8. And the question that we're going to deal with today is the question of Deysel. You're welcome to follow in your question book and your suggested solutions. And like with any question, we always start by reading the required part. So if we just refer to the required part quickly. In the A part, we have to prepare a combined adjustment journal entry in the books of Deysel for September 20.5. The date, very important. Doing this for September to record the information above. In the B part, we're preparing the bank account properly balanced in the books of Deysel on 30 September 20.5. And then in the C part, prepare the bank reconciliation statement at 30 September 20.5. So the A and the B part, those are documents in our records, the combined adjustment journal entry and the bank account. And then the C part is a document that we prepared to try and reconcile the bank's books, the bank's records of the same transactions with what we accounted for in our books. So we're going to draw up the framework for this question, the A, B, and C part, so that if we have the framework ready, it's easier to just complete the information as you read through it. So we've got the general journal. Following on the general journal, we've got the bank account of Deysel in the general ledger. And then lastly, we've got the bank reconciliation statement of Deysel at 30 September. Now, they told me in the required part that we can start this bank reconciliation statement, start with the balance as per bank statement. So we're somewhere going to include that sentence so that we know what we're looking for. So we dealt with the required part with our framework as well as the tip that they gave us here to start with the balance as per bank statement. Now, before we start reading the question, let's just quickly think about from the bank's point of view and from our point of view. From our point of view, bank is normally an asset, and if they tell you that it's a bank overdraft, then you know it will be dealt with as a liability. From the bank's point of view, if you give your money to the bank, they will be liable to give it back on your demand. So from the bank's point of view, a credit as a liability will increase and a debit will refer to a decrease. So whenever we have entries in the bank reconciliation statement, remind yourself of the increase on the credit side and the decrease on the debit side. This is from the bank's point of view, and the top two statements or journal and ledger that we're going to draw up, that's from the business's point of view. So now we can start reading. They tell me the bookkeeper of Deysel experienced problems in clarifying the difference between the respective balances on the bank account in the general ledger of Deysel and the bank statement of Deysel. So our records of the same transactions and that of the bank is not in agreement. You were approached to assist the bookkeeper in solving the problem. Now they're going to give us a list of information. Each of these items we're going to read and then decide, will this influence the A, B, or C part of the required? And will I need to keep track of this for later additional information? In number 1, the bank reconciliation statement at 31 August 20.5. Now, you'll recall we made little stars at the dates at which we need to prepare, and those with 30 September 20.5. So this information in number 1 is for the previous month. However, this bank reconciliation statement of the previous month is adjustments that we said need to be done to reconcile the two systems. So if these adjustments have not been made yet in the current month, we'll have to inform the bank about that fact again. So that's why the previous month's information is important for us. They start this previous bank recon with a balance as per bank statement, 1,080. This is the previous month's bank statement, which I do not have control over in any case, and I cannot change that, so that amount will not influence our information. The outstanding deposit of 1,210, we will have a lookout for this amount in the current month's transactions to see whether the bank now actually have that outstanding deposit accounted for. In 1.3, we have a similar heading, not outstanding deposit, but outstanding checks. And here they list 3 checks for the amounts outstanding. Now you recall that a check is only valid for 6 months. And if we have a look at outstanding checks with the dates given here, that first check number, 276, it's out of range from the other checks. And if you see the warning lights there, and you use the date to count the amount of months that this check has been in doing the rounds, from the 2nd of February, so that will be March, April, May, June, July, August. So August is already month number 6 for this check, and now we are in month number 7 in September. So this check appeared on the previous bank reconciliation as an outstanding check of 350 Rand. Now, how did it end up in last month's bank reconciliation? The business knew about it and the bank did not. Now, this is not a valid check anymore, so we will have to cancel this check. And whenever we have to cancel, that will happen in the general journal. We still need some more information on that, so we're just going to highlight that 350. Then we have 2 other checks, 812 and 813, the numbers, and they are both dated in August, so we don't have a problem with the validity of the check. In 1.4, they mention, part of the bank reconciliation statement still, balance as per bank account in the general ledger, and we had a favorable balance of 1,230. Now, the bank reconciliation statement was prepared 31 August. So between the 31st of August and the 1st of September, there couldn't have been a change in this balance. So I can start in my bank account with a favorable balance. So that would be on the debit side. In my bank account, on the 1st of September, I start off with a favorable balance of 1,230 Rand. In number 2, both check number 812, now there they already mentioned check number 812, so both that check and the deposit of 1,210 appeared on the bank statement for September. So I warned the bank about these 2 outstanding items in the previous month, and now I can just tick them off because they ended up in the bank reconciliation because I knew about it and the bank did not, and now they tell me the bank actually accounted for it in September. They give me further information about check number 276. Remember, we highlighted that as not a valid check anymore due to the lapse of time. Check number 276 was issued to Hasty Hands for repairs. So in our books, when we issued the check, we would have had an entry in the repairs account as well as in bank. And they tell us that the amount for that check was 350 Rand. So we had a debit in repairs and a credit in bank of 350. That is not a valid payment anymore due to the 6 months that had passed. So we're going to have to reverse out this 350 Rand. So that will result in a credit in the repairs account. So in my general journal, I can now move forward and credit the repairs with the 350 Rand. In the required part, they asked us to prepare a combined adjustment journal entry. Now, combined means we're going to combine whichever similar transactions we have. Now, for a bank reconciliation, we're trying to fix the bank account. So each transaction will influence the bank in some or other way. if it's a combined adjustment journal entry, I'm not going to have separate adjustments to the bank account. I'm only going to adjust the bank once, right at the end of my general journal. So I don't have to now indicate the debit in bank. I'm just going to indicate the credit in the contra account. In number 3, on comparing the bank statement for September with the cash journals for September 20.5, the following differences were identified. Now that's the whole process of reconciliation, a comparison between my books, the journals, and the bank's books, the bank statement. In 3.1, they mention the following items appeared on the bank statement. That means that the bank's records show these, and I'm only now aware of them, and I will have to go and fix my books. Now, whenever I adjust my books, I adjust it in the general journal, for which we already prepared the framework. I have checkbook fees, interest on overdraft, and service fees. The checkbook fees and the service fees we can add together as bank charges, but interest on overdraft, that is a very important amount for disclosure purposes, because the users of the financial statements will be interested in this as a separately disclosable item. So interest on overdraft cannot be combined with the other two items. Let's quickly do the checkbook fees and the service fees. I need to account for it as an expense in my books. So I can group them together as bank charges. And you show your calculations in a bracket. That's the 5 Rand plus the 17 Rand for service fees. So that will result in a 22 Rand bank charges. That's an expense. That's why I debit the expense. And then I have my interest on overdraft. And they gave me that as one amount of 32 Rand. So in my reconciliation process, I'm just determining where do I have to include the missing item or where do I have to fix the mistake. In 3.2, check number 1003 for 540 Rand appeared on the bank statement, so the bank knows about it, but not in the books of Deysel, so we were not aware of this. It was determined that the check was issued by Deysel. Now we are doing the books of Deysel, so that implies that the bank actually deducted this check, which is in any case out of the range from our checks, so it's already some warning lights. The bank made a mistake by deducting this from the account of Deysel, although it's a check issued by Deysel. Now, if the bank made the mistake, we'll have to go and do the fixing of this mistake in the bank reconciliation statement. Now, it's a check that appeared. So if you think about it in terms of the bank, there was a check issued, so there was a negative on the bank statement that we now want them to fix. So to get rid of that debit, of that negative, they will have to credit the bank statement with the same amount. So we're going to have a credit of 540 Rand in the bank reconciliation statement. Remember, reconciling the bank's books. And we're going to tell them about this mistake. It's an incorrect check. And we can give them the details of the drawer of the check. So there we've earned the mark for the adjustment for the mistake that the bank actually made. Then in 3.3 they mentioned the following items which appeared in the cash payments journal. So now we are aware of these items. They were not ticked off against the bank statement. So these items that we know about has not been presented to the bank. You remember they have 6 months to present the checks for payment. So check number 881, 893 and 901 for the details over there and the amounts. They did not appear in the bank statement. And now 3.3 continues on the next page where they mention that after further investigation, it was determined that check number 881 That's this first one. Check number 881 did appear on the bank statement, but as 127. It was determined that the amount on the bank statement was correct. So now both the entity and the bank recorded this check. We recorded it as 172 and the bank recorded it as 127, and the bank statement was correct. So we need to fix our 172 that we added to stationery. We need to fix that and turn that into 127. So if I have a debit in the stationery that is too high, I will have to go and credit my stationery account in my general journal. And we had it in as 172, and we want to turn that into 127. That results in a 45 Rand adjustment on the credit side to stationery, and the corresponding debit will be in bank, but we're doing a combined journal entry. So we do not have that entry at this point. They don't mention anything about the other two checks, 893 and 901. So that's the reason why we'll have to include this in the system where it was omitted. It appeared in the cash payments journal, and now we're going to add that in the bank reconciliation statement. So in the bank reconciliation statement, we're going to warn the bank about outstanding checks. And we're going to list these checks. We have two of them. Check number 893 and check number 901. So we can include those two checks. Remember, a check will be a negative, so we include them on the debit side. 420 Rand and 550. Back to our question. In 3.4, a deposit of 1,720 dated 30 September did not appear on the bank statement. So again, we knew about it, the bank did not, so we'll have to warn the bank about this omission in the bank reconciliation statement, and we're going to list this as an outstanding deposit. And an outstanding deposit will make the bank owe you more. It's from the bank's point of view. So we're going to include that on the credit side, 1,720. Further differences, 3.5, the bank statement showed a dishonored check, RD check, of 260 Rand. The check was received from a customer, Sunay Smith, in settlement of his debt of 290. So the cash amount was the 260, but it was settlement of his debt of 290. The bank now shows this on the bank statement, so I will have to still include this dishonored check in my books. Now, if it's not a valid check anymore, the debtor will owe me again, so I'm going to debit the debtor's control. And the name of the debtor. Remember, one for the general ledger and one for the debtor's ledger, so you have to include both of them. This debtor will not only owe me the cash part, the 260, the debtor will owe me the full 290, so I'm going to debit the account with 290. And then I have to go and cancel the settlement discount that I granted. And settlement discount would have been an expense, but the cancellation thereof is on the opposing side. That's why I put the 30 Rand on the credit side. Now in 3.6, they mention that the bank statement showed an unfavorable balance of 4,899 Rand at the end of September 20.5. bank statement balance. And we started our bank reconciliation with a heading here, balance as per bank statement. Now they tell me that it's an unfavorable balance. So if we look at our signs at the top there, unfavorable will be on the debit side. So I can include my indicator of whether it's positive or negative, debit balance as per bank statement, and I can start off with the 4,899 on the debit side. 3.7, a debit order for 600 Rand as payment of the monthly insurance premium to Sure Cover appeared on the bank statement. So again, the bank statement includes this, but our records do not include it yet, so we're going to have to account for this in the general journal. It's for insurance, so I'm going to debit the insurance expense with 600 Rand, corresponding credit in bank, but it's a combined journal entry, so I don't do that at this point. Then in number 4, they provide me with totals of columns on the 30th of September 20.5, both in the cash receipts and the cash payments journal. Now we post totals of journals to the general ledger, so I can use this to complete my bank account in the general ledger. And because it's the bank account, I'm only going to look at the bank columns. So I'm only going to use the 9,420 as well as the 14,260, the bank amounts in each of the cases. Please make sure that you can calculate these totals of the columns using the duality concept if they provided question marks there in all other questions. So we can include the 9,420 cash receipts. That will increase my bank on the debit side, 9,420. And I will include that as total receipts. You can also use sundry accounts. I got that from the cash receipts journal. And then I go over to, this will happen at the end of the month, just to complete our dates as well. And then on the credit side, also on the 30th of September, I will have an entry for my total payments, which in this case added up to 14,260. In additional information number 5, they mention a post-dated check for 500 Rand was received from Eswat for rent. The check was dated 1st of October. Remember, we are doing this reconciliation in September, and to date, no entry has been made in the books. A post-dated check will only become a valid form of payment once we reach the date on the check. So in this instance, they dealt with it correctly by not entering it in any of the books. So in practice, if I receive a post-dated check, I will just keep track of the dates of the post-dated checks and only enter them in the books as soon as they become a valid form of payment. If in a question they tell you that they did make an entry for this post-dated check incorrectly, then you'll have to deal with it in accordance with the reconciliation process. But in this case, they dealt with it correctly. Now we're done with all the additional information. We just quickly need to run through last month's bank reconciliation statement to make sure that all the items that were outstanding in the bank's records have now been entered, and if not, then they will have to appear on the bank reconciliation statement again. Now check number 813, which is still a valid check because it's only dated 27 August, of 520 Rand, was in last month's bank reconciliation. They did not mention that it appeared anywhere in this month, so check number 813 will also have to be added to my outstanding check list in my bank reconciliation statement. So I'm just going to add it with all my other outstanding checks, 520 Rand. So at this point, we've captured all the items missing from my records. We've included the totals in the ledger, and we've included all the outstanding items in the bank reconciliation statement. Now we just need to finish the process. In the general journal, you will see that we've got quite a few debits and credits over there. Now here we already have 600 Rand and 290 on the debit side. So if I want to calculate the balancing amount, the effect, the net effect on bank now, I will have to add up the debits and the credits and calculate where am I missing out on a monetary value. So if we have a look at the value of the debits, we'll take all the debits, 600 plus the 290 plus the 32 plus the 22. And we'll do the same with all the credits. And then you will see that we need a balancing amount of 519 Rand on the credit side after taking the debits and deducting those credits. And that is our balancing amount for the combined adjustment journal entry in bank. Now we do a journal so that we can follow the accounting process and adjust the ledger account. So that 519 Rand will be your adjustment that you need to do in your general ledger account. We are going to include that as bank statement adjustments. And if they want to see the detail of that, we tell them go and have a look at the general journal. At this point, our bank account has got entries on the credit and the debit side, and you will see the credits, 14,260 already, will exceed my debits. So if I add up these two credits, that is my total. And then we can just balance the account, 14,779 minus the 1,230 minus the 9,420. And that will give me my balance of 4,129. I have to bring that down. So at this point, I've got an adjusted balance in my bank account of 4,129. The bank statement showed a 4,899, and if the bank adjusts this balance, which is not in agreement with my records, if they make an adjustment, like we list them here, of 540, the 420, the 550, 520, and 1720, you will see that at this point after the adjustments, we're going to end up in the bank reconciliation with a debit of 4,129. But if I bring down this credit of 4,129 from the bank account, I will see in my bank reconciliation statement that the reconciliation process was successful. So if you take all your credits at this point and you add them up, 6,389, and on the debit side, 6,389. So these two different balances will be adjusted with the amounts in between, and that will reconcile the system in our books with the system of the bank's record of the same transactions. So this is the bank reconciliation process. in my books and from the bank's point of view. I hope that you will find this to your benefit, and good luck with the other questions.